All right. Good morning, everyone. It's Joe Bladdock here. Welcome to today's announcement. Are you guys ready for a really good show? We're going to look at what's happening with interest rates. Are interest rates going up? Are interest rates going down? What's the Bank of Canada going to do today? And we have a lot of anticipation to today's show. What I wanted to get into today is exactly what we're going to cover, and that is our pre-rate show today. So my name is Joe Bladdock. I'm a mortgage broker in Simcoe County. I service mortgages all across Ontario, specifically Orillia and Barrie, Ontario. And this is a special episode of Canadian Mortgage Weekly today. So as we are watching today, let's get into the pre-rate show. Today, we're going to talk about some of the news that has been out there with what's happening in the market and the rate increase and the expected market, what's happening. So let's take a look at the news that has been leading up to today. One of the things that has been leading up to today is that the news outlets have been reporting that they are expecting another rate increase. And that is quite interesting. We're seeing that the rate increase is supposed to be, by these news outlets, anticipated to be between 50 to 75 basis points. Now, prime rate right now for the banks is sitting at 4.7%. That is a much higher prime rate that we've seen in the last few years. So another increase of 50 to 75 basis points would bring that prime rate to either 5.2 or higher. So that is an interesting concept for a lot of people that have variable rate mortgages. Now, with what's happening as well in the news is that inflation has been actually coming down recently. We've had record high inflation this year, but inflation has come down. It's come down to about 7.6%. And that's the first slowdown in inflation we've seen since the rate hikes had begun. We've seen inflation hit 8, almost close to 9% this year. So that is wonderful news for anyone that is thinking about what's happening with inflation and where that's headed. So also, as you're watching this show today, our pre-rate show, make sure you leave your comments below. Share what you're thinking about what's happening with interest rates. I'd love to hear about it today. And another thing, trigger rates. What's happening with the market and people that are holding variable rate mortgages with a static payment? Now, for those folks, their mortgage payments have not changed since these interest rates have begun, which is a very interesting concept. I mean, imagine having a variable rate mortgage where the interest rates don't change. Well, with that, essentially, with this announcement, if there's a mortgage rate increase, then we will see them hit their trigger rate if they took their mortgage out in March or at the beginning of the pandemic, because rates have gone up so substantially. And even though they have a static payment, they might actually be seeing a trigger rate, which could actually give them some new news that they would need to work on with their bank. And they would have 3 options with their mortgage, which I'll discuss in a minute. Now, what's been happening with fixed rates up until today? Well, since the last rate announcement in July, we've actually seen 5-year fixed rates fall. And that is a very interesting thing because we've seen variable rates increasing, but fixed rates have fallen since their peak in July. So that is an interesting thing to see because we're expecting a Bank of Canada increase today, which could mean variable rates will go up. However, fixed rates have fallen. So with any of the buyers that I've been working with since July, they've actually been able to renegotiate their pre-approvals, and their 5-year fixed rates have fallen since the July peak, and they've been able to get a lower fixed rate so they can move forward with any home purchase at a lower rate. So with that has been closely correlated to the 5-year bond yield, and the 5-year bond yield has been remaining flat since about the beginning of August and has fallen since July as well. So that is an interesting thing because 5-year fixed rates typically correlate with the 5-year Canadian bond yield. So if you're interested in graphs and math and looking at all that, follow the 5-year Canada bond yield and see where your fixed rates are going. I'll be reporting this tomorrow on my regular scheduled show with what's happening with the bond yield and the market's reaction, because we usually see the bond jump, spike, or go down after an announcement like this. Another thing is that what's happening with the CDOR rate. Now, the CDOR rate is a good predictor as to whether or not variable rate mortgages are a great deal or not so good of an option. Now, the CDOR rate has gone up to 3.9825%. And what I do is I look at the variance of that from the prime rate. And as of today, the variance is quite low, actually, 0.8075%, which is actually lower than 2%. And if the variance is lower than 2%, then the variable rate option is no longer favorable. However, variable rate mortgages have been gaining in popularity ever since the pandemic began. They do offer lower payments, and they do offer greater flexibility. If the customer wants to break their mortgage, the penalty is usually quite a lot lower. So that is an interesting move, except, a lot of people have also been locking in. A lot of folks are risk averse. So, and with fixed rates falling, a lot of people have been looking at that as an option as well. So always customized to the client. It's always good to make sure you look at what is good for you as a mortgage holder. And I like to make sure that it matches what your plans are going forward as well with what's happening with your home buying process or what your goals are as a homeowner. So what's been happening with articles? Let's take a look at the articles. What are they saying? What are the news outlets saying as to today's announcement before we hit the announcement here at 10 a.m.? We're about 8 minutes away. Should be an exciting announcement. All right, so with inflation, even though inflation has been dropping since the peak we've seen earlier this summer, inflation is still not over. And a lot of folks are saying, a lot of articles are saying, inflation is not over. We need to continue these interest rate hikes to bring inflation to normal levels. Also, articles have been saying variable rate mortgages have been gaining in popularity. That is also an interesting thing because, as I said, variable rate mortgages usually have these flexing payments where payments can go up, payments go down, but they have been gaining popularity because A, the payments are still lower than fixed rate mortgages, and B, folks can usually afford a larger mortgage on a variable rate than on a fixed rate. So that's why variable rate mortgages have been gaining popularity. People just aren't qualifying for as much as they used to. So that in itself has gained popularity in variable rate mortgages. Also, a lot of articles and news outlets are reporting that more rate hikes are needed to still bring inflation under control, even though inflation has dropped since the peak levels, and even though fixed rates have dropped since the summer. So that is an interesting thing. A lot of articles are saying that variable rates still need to go up. So what are clients saying to me? What's the growing sentiment I'm seeing with my clients? Well, clients are expecting that rates are going to continue to go up. A lot of my clients I talk to, they ask me, Joe, what do you think is happening? Well, I don't have a crystal ball, but I do see the numbers. Fixed rates have been falling. Variable rates have been going up. Bank of Canada has been increasing rates. Customers, my clients are thinking that rates are going to continue to go up, and they're planning to make changes. If they have a variable rate mortgage that has a fluctuating payment, they're planning to adjust their budget so they can make sure they keep in their variable rate mortgage and not lock in. So when the rates do go back down, they can take advantage of that. However, they are expecting that the rate increases will be around for at least 12 to 24 months. Now, a lot of clients are also saying that because these rate increases are becoming normal, they are also expecting the market to crash. A lot of my clients are saying they're also waiting to buy. A lot of my clients are saying they're waiting to buy until January 2023. Now, that is an interesting thing because an article that was recently come out from TD Bank has said that they are expecting house prices to crash up to 20 to 25% from their peak in 2022. Now, the peak was February, and since then, prices have already crashed 23.8%. So they are still expected to crash between 20 and 25% by January 2023. And that's when a lot of my clients are waiting to buy right now, which is an interesting thing. But I don't know about you. Are you waiting to buy? Are you waiting to move on your mortgage? A lot of my clients right now are making their moves today because they want to get in before any more increases. So there's two camps there. And a lot of customers that are in a variable rate that have a static fixed payment right now, and they've taken their mortgages at the beginning of the pandemic when prime rate was ultra super low. A lot of those clients are about to hit their trigger rate if the rates go up today. And a trigger rate is where because the payment doesn't change and the rates have been continuing to go up, that the interest portion of their mortgage payment actually increases past their total mortgage payment. So their payment remains static, but the interest has grown beyond it. So each payment now is negative, and it's affecting the principal in a negative way, which you don't want. So you usually have three options in that case. As a client, you have an option to increase your payments with the bank so that doesn't happen continually, or you have the option to lock into a fixed rate, which fixed rates have dropped recently, or you have the option to make a one-time lump sum balloon payment, which a lot of my clients and a lot of clients in Canada really can't do right now. Inflation's at an all-time high, and it's really hard to do a balloon payment to catch up on that rate. So it'll be interesting to see. I'll be covering the reaction of the market tomorrow of what's happening with those trigger rates. Now, last time there was a rate increase, as we're following this on our pre-rate show, that would be July 2022. July 22nd, 2022 was the last rate increase. And that was a 100 basis point increase. And that was a very, very large, supersized rate increase for Canadians. A lot of Canadians saw their mortgage payments jump considerably for those on a variable rate mortgage with a flexible mortgage payment that goes up and down. And a lot of the clients on a static variable rate mortgages saw their amortization increase quite considerably. Now that was from the last rate increase in July 2022. And then the last time there was a rate decrease, if we're looking at that, the last rate decrease was in March of 2020. So that's years ago now. That's at the beginning of the pandemic. And that's what I'm talking about. A lot of those clients that took static payment variable rate mortgages, they're about to hit their trigger rate today if the payments go up and the Bank of Canada does increase rates quite considerably, which we're also expecting a 50 to 75 basis point rate hike. We're about 2 minutes away from that rate announcement right now. Let's take a look at websites. They're reporting that inflation has fallen recently from the highs in the summer. The bond market has remained steady since the last rate increase, and the average house price has fallen 23.8%. So going into this rate announcement today, we are seeing that mortgagedashboard.ca, which is a great news source for Canadians for mortgages, is reporting a rate hike chance of 100%. So whether or not it's a 50 basis point rate hike or a 75 basis point rate hike, it remains to be seen. We're going to take a look at that in just a minute here. We're about 2 minutes away from this rate announcement. So some things to consider today. There's been a lot of speculation up into today with what's happening with rate hikes. If rates do change, I want to give you an idea of what's going to happen. Any of those with variable rate mortgages that have the flexible payment will see their payment either increase or decrease. Also, those with home equity lines of credit, variable rate car loans, unsecured lines of credit, and variable rate credit cards, they will be affected as well. Also, if rates do change, typically the payment either goes up or goes down depending on which way the rates go. And if you're in a static payment product for your car loan or mortgage, then instead of your payment changing, your length of amortization will change. And that's the amount of time it takes to actually pay off your loan. And that's going to change. So that's either going to increase or decrease based on the rate announcement. So we're about 1 minute away from this rate announcement. I'll just check here to see if we have an announcement yet. We'll just see if it's been published. All right. Not yet. It's about to be released here. So just stay with me here as I cover some more information on our special episode 96 of Canadian Mortgage Weekly. Also tomorrow at 11:30, I'll be covering some of the market reaction to this announcement today and what's been happening in the market with all that. Oh, wait, we have an announcement. It's been released here. So Bank of Canada increases the rate by 75 basis points. So you heard it here today on Canadian Mortgage Weekly. Bank of Canada has increased rates by 75 basis points. That is a 0.75% increase in the prime rate. Banks will be changing the prime rate as of this announcement. We'll see the prime rate go from 4.70% up by 75 basis points. So again, with that, because the rates have gone up now, it's actually the higher end of what was predicted, even though inflation has gone down slightly, even though fixed rates have gone down slightly since the summer. The Bank of Canada has decided to move ahead with an increase in the interest rates today. So with that, let's take a look at that. If you have a mortgage with a variable rate payment, you should expect to receive a letter from your banking institution showing you the new payment on your mortgage. The payment, if your mortgage has a flexible payment, will have a payment change going up by 0.75%. If you are on a static rate variable rate mortgage, then instead of having your payment change, you will see your amortization, which is the length of time your mortgage takes to be paid off, increase in length. Now, a lot of those folks, as I was saying, they took mortgages out with a variable rate static payment in March of 2022 when rates went down, and it was the beginning of the pandemic. At that time, rates were super low, and those customers will actually see their banking institution reach out to them because they may hit their trigger rate today because of this interest rate increase. And that trigger rate will essentially give those clients three options. You'll be able to either increase your payments with your banking institution to catch up, or you'll be able to make a lump sum balloon payment to catch up, or you'll be able to lock into a fixed rate so you won't have to see any of these further changes in your mortgage. Now, fixed rates, they have gone down since the summer just slightly. However, they're still also a lot higher than they were at the beginning of the pandemic. So that's where we're at today. Rate announcement has been made by the Bank of Canada. It's a 0.75% increase as of today. We should see prime rate. Now, we should have expected this. The Bank of Canada has been talking about getting inflation under control no matter what. And that mortgagedashboard.ca has been reporting a 100% chance of a rate hike today. As I said, last time there was a rate hike, it was in July 22nd, 2022. That was a rate hike of 100 basis points. So today's rate hike is actually a little bit lower than the one in July. July was 100 basis points. Today we have a 75 basis point increase. However, that is still considered a supersized rate hike, very high rate hike. Tomorrow I'll be talking about how much of a difference this will make on an average mortgage. But any one of those that are in a variable rate mortgage with a fluctuating payment, you should see your banking institution reach out to you shortly within the next 30 days about a new payment and what that payment will be. Now, if you have a static rate variable rate mortgage, you'll see on your online banking or wherever you check your mortgage details or your mortgage statement that comes out, your amortization will actually increase. I've actually seen some of my clients and fellow clients that have their amortizations have increased since these rate hikes have begun from 25 years to 30 plus years. I've actually heard of someone have their amortization increase to over 50 years right now because of these rate hikes, and they have a static rate variable. Static rate variables are great mortgages for those who want the benefits of the fluctuating interest rates, but need to have cash flow remain at the same level. Now, because of this rate hike, we will see that trigger rate potentially hit a lot of clients today, and your banking institution will reach out to you to get that sorted out with you. And as I mentioned, if you're just tuning in, there are three options. You can either increase your payments, you can lock into a fixed rate, or you can make a balloon payment. So it'll be interesting to see what happens with the bond yield going forward. As I mentioned, the 5-year fixed rate closely correlates to the 5-year bond yield in Canada. Last time there was a rate increase in July, the bond yield has not really moved since then. It's gone down a little bit. And because of that, fixed rates have gone down a little bit. And because of this rate hike today, actually, I think that now variable rates are going to be higher than fixed rates for the first time in a number of years, which is going to make it a lot more advantageous for a lot of clients to really look at the fixed rate as a viable option. This doesn't really happen too much. This hasn't really happened too many times in history with the fixed rate being higher than the variable rate. I know the last time it happened was just at the beginning of just before the pandemic there, where there was that inverse relationship. And this also happened in 2008, 2009. As those fixed rates were going down, the variable rates were going up. So be interesting to see what happens going forward, what the news articles are going to say about the next rate announcement and what's happening there, because we need to really take a look at this and make sure each Canadian has the right mortgage for them. If you're looking to get a mortgage, make sure you reach out to me, Joe Blodek. I'm a mortgage broker servicing Ontario, specifically the markets of Barrie and Orillia and Simcoe County. However, I also service markets all across in Northern Ontario, such as Windsor, London, Woodstock, Waterloo, Kitchener, Toronto, Durham, Ottawa, Peterborough. If I haven't mentioned your city, don't be shy. Reach out to me in the comments or reach out to me. I can make sure that we place your mortgage with the appropriate lender. Whether or not you're looking for a 5-year fixed mortgage, a lower term fixed mortgage, a variable rate mortgage with a fixed payment, because those do exist, or a variable rate mortgage with a fluctuating payment. Now, if you're just tuning in today, I'm just going to take a look at the comments to see what's in the chat. If there's any questions, I'll make sure to look at that here. Okay, so we are seeing a lot of people comment from different platforms that they have taken a variable rate mortgage and that they have made out better than people that have taken a fixed rate mortgage. Now, that could be the case, especially if you've been in a variable for a number of years. I know for a number of years, variable was a lot lower than fixed rate, so you've been able to pay off a lot more principal up until now. And even though your payment is higher right now than it was, your principal has been a lot lower than if you were to take a fixed rate mortgage. However, today, if you're taking a mortgage today, it's really based on your goals as a homeowner, as a home purchaser, maybe you're an investor, and you really need to make sure you're talking to your mortgage professional, whether it's myself or your other mortgage professional, to make sure your home ownership goals match the mortgage you're in. That's really important and key, because with the variable rate mortgages, some of the advantages you have with a variable rate mortgage, even though payment or amortization fluctuates, is that the penalty, if you ever want to make any changes on your mortgage, is quite a bit lower. On most of these variable rate mortgages, you're looking at only a 3 months interest penalty to get out of a mortgage like that. Whereas if you're looking at a fixed rate mortgage, if you ever need to get out of a fixed rate mortgage, it's an interest rate differential calculation, which typically puts the penalty of getting out of a mortgage like this 3 to 4 times of what a variable rate mortgage is. So if you're an investor or a homeowner that continually makes changes on lenders or likes to switch the lenders or refinancing or just using your home equity for different purposes, and you make a lot of changes, a 5-year fixed mortgage may not be the best way, because you're really locking in for the long term, and breaking that mortgage is really going to give you a large penalty. Myself, I've gone through that personally. When I first bought my first home, one of the first mortgages I ever took was one of these fixed rate mortgages, and I was charged a penalty of $10,000 plus, and it really hit me at the most inopportune time, and I really didn't know anything about it. So since then, I've personally taken variable rate mortgages on my own properties. My last 2 mortgages I've taken were variable rate mortgages. I took a fixed rate mortgage before that. I really regretted it, and variable rate mortgages before that. So that's where I'm at today. So again, today's Bank of Canada interest rate announcement, it is a 75 basis point increase. And with that, if you guys are looking to get a mortgage today, my name is Joe Blodek. I'm a mortgage broker with Lend at Ease, Verico Mega Mortgage, and we help clients all over Ontario get mortgages with any lender that you're looking with. So again, my name is Joe Blodek. Thanks for watching today. Bank of Canada really surprised us with the 75 basis point increase. We were expecting a 50 to 75 basis point increase. So seeing a 75 basis point increase is quite considerable, considering what the news outlets were reporting. It'll be interesting to see what happens on the next rate announcement. And as of what's happening tomorrow I have my regular scheduled episode 97 of Canadian Mortgage Weekly. We'll be talking about the market's reaction to today's announcement. Join me tomorrow at 11:30 a.m. Eastern Standard Time here on my Facebook page, Twitter page, YouTube page, wherever you're watching today. And we'll see you then. Thanks for watching, everyone, and we hope you have a great day.